One of the things that you do want to take into account right now is if you have a unit for rent and the phone calls have kind of dropped off in the past 2 weeks for August, that is traditionally what happens. So don't freak out. There's no reason to start slashing prices and losing the plot, as it were, simply for the fact that, generally speaking, it does slow down in the last 2 weeks of August as people get ready to get their last vacations in before they go back to university. Families are getting the kids ready to go back to school, that sort of thing. So looking for a place isn't top priority at this point in time. Hello, everyone, and welcome to the show. This week, we're going to be covering the stats for the month, as well as some different tactics to be using while we are dealing with the current upheaval with the tariffs, as well as the general market for investing and sales and rental in the Greater Vancouver area. So without further ado, let's get into it. The unfurnished bedrooms for one-bedroom units, that is, has increased by $9 whole. So there is a slight increase in the rent, but not exactly anything to write home to. One of the things that we do need to take a look at, though, with this is that it is only $108 from last year to this year. So that is a significant difference in what the prices were year over year. The question is not so much as if the market is recovering as much as has it started to stabilize. Year over year for the past 3 years has been quite a range. In 2024, we were looking at $23.78. Then the following year, 2025, was $22.06. And then now we're at $20.98 for what a one-bedroom unit in Greater Vancouver is on average. So that is definitely changing from year over year, going down on a trend. However, in our current market, we've had a range of $12 since April. So the graph, as you can see, is flat, basically. Not very much of a change there. So I think as far as where the rental prices are right now, we have kind of leveled out, and I don't foresee them going down too much, barring some sort of a change, such as a sudden influx of rental units, say a purpose-built building, which is some of the things that have been causing the lower rents across Greater Vancouver, as well as the lack of immigration and student visas. So we basically have supply and demand happening where we have a fair amount of units for rent and nobody to rent them. So therefore, it's been a bit of a battle going down, but I do feel that we are getting to about the basement of where we have been. Obviously, I don't have a crystal ball. One of the things that you do want to take into account right now is if you have a unit for rent and the phone calls have kind of dropped off in the past 2 weeks for August, that is traditionally what happens. So don't freak out. There's no reason to start slashing prices and losing the plot, as it were, simply for the fact that, generally speaking, it does slow down in the last 2 weeks of August as people get ready to get their last vacations in before they go back to university. Families are getting the kids ready to go back to school, that sort of thing. So looking for a place isn't top priority at this point in time. So you'll probably start to see things pick up towards the end of the month. And obviously into September, you'll start seeing things pick up again. So don't fret if you haven't been getting any calls lately, or you've noticed a drop in the amount of calls you've been getting. It's totally normal and typical for the time of the year. That being said, of course, if the trend has been for quite a few weeks that you haven't got any calls, it may be time to reevaluate how you're marketing your place. If you can upgrade anything, maybe the price is too high. You do have to take a look around at what's happening there in the market, regardless of the timing, of course. A major factor is, of course, price, but it also flexes between city to city. So there's no Greater Vancouver average total. And the reason why I'm saying this, we start off the show, of course, with what the Greater Vancouver total is, but that does vary from city to city. For instance, UBC is not going to be in the same price as Wally, for instance. So they do vary from city to city and even into a micro from city to city as well. So even using Surrey, for instance, Fleetwood is going to be different than Wally. Just in areas of New West, which is very small, uptown's different than downtown. This sort of things, along with Sapperton and anywhere else in New West, really. So you do have to take into account really in the microcosm of what you're looking at. So your one bedroom, while it may be in competition with other one bedrooms, do take a look at the general area of what's going on in those areas. The other thing that you want to take a look at as well is particular items of your home. So what are the comparable units actually renting for? Now that's quite tricky to find on with normal sites and all this, because they generally just go onto Craigslist or Facebook and then they disappear once they get rented. So it is a little bit trickier to find that out. You do able to look at stats such as live.rent. They do carry their stats. Any of our shows here, we do follow the stats as well, as because we have access to the MLS. Now the MLS doesn't have as many units on it. It is starting to pick up gradually, but at least we can get some sort of an idea of what things are renting for, the average percentage that it's going under, that sort of thing. So ask a professional. They may be able to help you out with what numbers are looking at as far as the actual rental price. So that is something to take into account when you're pricing it out, as well as just other factors in your micro area. How many units are for rent right now? If there's a whole bunch of one bedrooms that they're all at $1,600 and they're still sitting there, chances are whoever blinks first, i.e. drops at that $100, would probably rent before the other people. You also want to take a look at items like, are they close to transit? What are the competing buildings offering? Are they offering to allow for pets? Do they come with parking? Do they have in-suite laundry? Have they been updated? All these sorts of things do factor in. So when you're trying to price your home, if it's not currently renting, take a look at your competition and be honest with yourself. It sucks sometimes to have to be honest with yourself and admit that, hey, maybe the person down the street has a better product than me, so I'm going to have to adjust my price accordingly. And it is kind of a tough pill to swallow because it is your place. So you do, and many times, have an emotional attachment to that place. So try to just take it down and take it with a grain of salt and basically figure out where you are in your positioning, and you will be able to get the place rented. Because as far as the rental prices have now kind of bellied down and basement, you still will be able to rent. It's not like anything is just unrentable. So take a look at that, adjust as you need be, and you will get your place rented to a good tenant in short time. So you do have to take those into account. Now, I did touch on updates, which is something that we do kind of talk about a lot in our show, and you really do need to keep your place updated, especially because we're starting to get into the competition between old versus new. And a factor to take in is that a lot of investors go after the brand new place thinking that it's turnkey. The difference is, though, with these brand new places is that, yes, they are shiny with the quartz and the stainless steel appliances and the fresh paint and all that stuff. You can do that in an older place. So you may want to consider, when you're investing, to purchase an older place that is near transit, much like all these newer ones are, and then update it to get it to be in competition with those newer places. The other thing that's interesting with the newer places is that they tend to be tiny, really tiny. So if you can get an older place that needs a little bit of sweat equity, then you can end up with one that looks a lot like the newer places with the quartz countertops and laminated flooring, fresh paint, and all this stuff, but you have a bigger place on top of that. Additionally, a lot of the older places already automatically come with parking and storage. The newer ones, it's an add-on. So a lot of people are purchasing these new ones and cutting some corners by not getting parking, which, yes, it would be great if we didn't need to use cars as often as we do, but let's face it, we're kind of spread out all over the place. You, for the most part, do need a car. It will make it a lot helpful and easier to rent in the long run, as well as for resale. Which, speaking on the resale, If you went and spent the time to update your unit, now when you go to resell it, you've already got that sweat equity put in there. You painted the walls yourself, put in the flooring, did that sort of stuff, that you now have an updated place. So it's going to likely be worth more than when you purchased it, which is a good thing, of course. So you can buy a older place that needs a little bit of work. That way your mortgage is down lower. It will help you cover the nut, i.e. the NOI, making sure that you cover your mortgage and insurance, all your strata fees, this sort of stuff in a strata building. And then go ahead and sell it off later on once somebody has been building that equity for you over the couple of years as you wait for the market to improve. So for today's investment purposes, I would recommend looking at older places that need some work. The market has been pretty slow, so this way you will be able to buy one, make some updates, ask for the top rent you can get, and then later on down the road, be able to sell your now recently updated place in a couple of years for max dollar and hopefully turn yourself a nice tidy profit, which you can rinse, wash, and repeat. So that would be the main ones that I'd go for. Now, we do get asked lately and generally what's going on in the market as far as pricing and that on the sales side and all that. Obviously, things are quite difficult to predict, especially with this bell end down in the US right now with all this tariff madness. So it's kind of hard to predict the market of what's going on. I do feel, though, that we are going to have some form of a recovery, prices going up within the next 2 to 3 years. The reason for that is because there's been a 42% drop in this year of tower starts. So that being said, we have a lot of product right now that will eventually get rented, purchased, people living in them. But if we don't have a bunch of starts happening to replace said units, then you'll end up with a shortage, and therefore supply and demand will take over, and we'll end up with a couple of years where they're trying to catch up with the units, and which makes yours now a premium. So again, going back to that updating situation that I was just talking about, that if you buy a place for fairly cheap, update it yourself, and are able to turn around when the market improves because someone's been covering your mortgage for you, you should be able to turn a nice tidy profit, and maybe can do that again before everything really kicks off, and just follow the trends and make yourself a couple of bucks. Now, the tariffs have been a big question that people have been asking about what's going to happen. Obviously, as I mentioned before, I don't have a crystal ball, but I do foresee there being two scenarios. One, with these tariffs, it's going to cause higher prices and inflation. So this here may guide the Bank of Canada to maintain where their interest rates are for mortgages, or possibly raise them. Who knows? I would suggest probably keep them at the same level will be coming up. The other one is that it will cause a weaker GDP and job losses and this sort of thing, obviously lower exports. So this may also cause the Bank of Canada to lower the interest rates. So it depends really on how the Bank of Canada views this. They are meeting next week on September 2nd. So we'll have a better idea, obviously, because they will tell us what's happening. But if they do end up lowering it, that may start the market to start pick up as far as purchases for those that are not as affected by these tariffs. So if you're in the fortunate position to be in that section, this might be a great time to pick up a inexpensive property, work on it, rent it, and then sell it off later on once things kind of level out and stabilize. So that is basically the insights that I have on the tariff situation. I'm sure everyone else will have their different take. Either way, it's going to be a little stressful for everybody involved. So hopefully we all stay strong. And that basically covers everything that we need to cover for the Greater Vancouver investment and rental markets. So if you have any questions, make sure to email us, which the email is in the description below. And if you've been listening this long, thank you very much. We really appreciate you, and we'll see you next week.